and welcome back to Blocks Live TV. You're watching New on the Block with me, Leah Heilper. Now, a discussion that is often had within the crypto space is whether new up-and-coming technology is going to replace or be the end of traditional finance and banks as we currently know it. But what about a hybrid of the two? Well, one bank has done exactly that, Exim Bank. The trade finance institution facilitating global trade became the first traditional financial institution to go live with Ripple's XRP, a regulated authorized system dealing with crypto. Now, joining me to get some more information on this is Graham Bright, Head of Compliance and Operations at Exim Bank. Graham, great to have you with us. How are you doing this morning?
Thank you, very well indeed. Looking forward to the conversation.
Absolutely. So lots to discuss, very, very interesting topic that we have with us today. And I want to start by understanding what it is that the bank actually does. So you handle transactions of global commodities.
That's right. We're quite a unique and very bespoke, specialized institution. We're based and headquartered in St. Lucia, but we also have a rep office which is based in London. And what we do is provide issuance of letters of credit, standby letters of credit, those instruments which are really powering the whole of world trade, not from the point of view of derivatives, equities, bonds, etc. We're looking at the actual movement of goods and services cross-border across the world. Billions and billions of dollars of transactions taking place every day across the international systems there.
Okay, now you are, of course, heavily involved in crypto, so that's what we're going to discuss today. And initially, the bank was not dealing in crypto, but something obviously changed. So can you explain what happened? Because you're not holding dollars anymore, are you?
No, that's right. So there's a traditional banking model which says that every currency you need to move into, you have a Nostro account or a correspondent account in that country, and you have to transfer or debit and credit an account in that particular country, which means you're holding many different relationships in different jurisdictions. What we've done with the use of cryptocurrency and Ripple in particular, the XRP, is to be able to look at liquidity levels for each of those particular currencies and only have one unique currency we need to switch into, which is XRP. And that means immediately the cost of doing these particular transactions is reduced. We're looking at a ubiquity, a spread that we can go to any country and not have to hold their particular currency in order to provide a service to their local SMEs who are trying to do trade business. So that has a number of unique benefits. For us, it means, again, the holding of correspondent relationships is expensive. We don't need to do that anymore. On behalf of our customer, we can pay away in local currency, and they can pay their supplier very easily without having to hold another currency as well. So from an overall point of view, it really facilitates, as I say, the whole of the trade flow, but also means that you don't have to hold dollars, which means your cash flow can be protected as well.
And I want to understand just a bit more about this. And so can we dive a bit more into how actually it works using Ripple? And I want to understand about XCurrent and XRapid, because we did speak earlier and you did tell me a little bit about this.
Yeah. Okay, so let's be very clear what Ripple is as far as we're concerned. Remember, it's a technology company, not only the provider of the crypto, the XRP currency as such, the digital asset. So from a technology point of view of a company, the whole of the point of view is linking up different players in the markets, the financial markets, to ensure there's a very rapid, guaranteed, transparent, frictionless movement of funds underlined with the XRP currency. But what that also means is that there are two particular services being offered. The first one being the XCurrent, where we're able to pay away immediately across Ripple in real time. Now, when we look at traditional payment methods, we're looking at perhaps hours or days in which to actually facilitate a payment anywhere in the world. And that means it has to go through a correspondent banking relationship. Not every bank deals with every other bank, which means, again, there's a causation or a link between a number of different players in the market. That takes time, could be money, and in some instances, a number of weeks can go past where a payment is trying to struggle its way through a link of banks who don't necessarily have relationships with each other. And banks being what they are, there is money to be made by holding on to large amounts of money, and there's interest to be generated. So banks are not necessarily always very keen on disposing funds as quickly as they might be. What we're looking at using Ripple is an association, a network of financial institutions who've signed up to a rule book. There are standards, there's a transparency, and a way to real-time move those funds between different currencies through payment and currency corridors. And that's important that we're already looking at, for example, the Philippines, Mexico, so we're facilitating funds moving into South America, into Africa as well, so that players in that particular market are not constricted by having to have dollars or moving funds into different currencies as well. So that's the ex-current part of the system, the ability to pay away in a certain currency in real time and being able to see exactly where your payment is taking place. The next one, XRapid, is, so for a different type of service, is where we're looking at the liquidity levels and the amount of capital needed in order to do a transaction to a different country. Here, what we're using, instead of switching into dollars to pay a dollar nostro, is with locally, I would perhaps take Nigerian Naira into XRP. XRP is the underlying asset, and at the other end, the other party switches from XRP into its local currency. So what we're looking at is liquidity instantly being available through a vast amount of XRP currency in order to facilitate local transactions being able to pay away into local markets. And that happens again in real time with a guarantee that there's no fluctuation on the currency as that particular digital asset moves across. Remember, it's in real time as well. Now, when you're dealing in transactions for jurisdictions like Africa, South America, it's not always easy. In order to switch into dollars, there are currency, there's regulation, there's compliance, there's due diligence, in order to actually build and get access to funds. This way, with an almost unlimited pool of liquidity, companies are able to transact trade very easily, and then in a very transparent way, and again, frictionless cross-border.
It's truly fascinating, really, isn't it? Just to think you're able to get those funds, make those payments to the other side of the world. And like you said, it is in real time and it is transparent. So it's absolutely fantastic, really.
Yeah.
And you were the first financial institution to go live with Ripple?
Well, let's just qualify that. We are not one of a number of financial institutions. However, we're the first regulated, supervised company which is able to do that. So whilst there have been a number of players and some of the major banks are using Ripple, they've not used XRapid in anger. We are the first regulated supervised bank in order to do that through our regulation in St. Lucia.
And I think that's one of the key points as well, really, isn't it? The regulation, because at the moment the crypto space is often seen as the Wild West. So there's that regulation there, which really is quite a game changer. And I want to ask you, why Ripple? Why not any other form of cryptocurrency?
I think from the point of view of Ripple in particular, remember it's a technology company foremost, which is allowing connectivity to different players in the market. You can't just say in the Wild West you'd go out and shoot people and hope for the best. Here we're looking at defined people on the network within the ecosystem. They have to be available to receive a Ripple message, for example. So they must be technically enabled with a blockchain style environment in which to do the transaction in the first place. But the important thing, really from the whole of the regulatory point of view, is that Ripple are setting standards in order to do this, setting the way that interoperability can take place as well. And that means that if everybody works on a standard proposal and a standard way of working, then it's going to be easier to go cross-currency, cross-language, cross-culture in order to move those types of messages as well. So it's important to have this underlying company there as opposed to perhaps Bitcoin, where somebody said to me, so if something goes wrong with Bitcoin, who do you call?
Okay.
Well, someone said Ghostbusters, but it's not. But here with Ripple, there's the underlying company separated from what is the crypto part of the currency. And we're happy to use the digital asset, the XRP, as the underlying asset, as I say, when we're using XRapid, for example, for transacting cross-border for the smaller SMEs as well. So you're absolutely right that regulation and compliance is an absolute nightmare. We know about crypto exchanges which are accepted in some countries and not in others. Cryptocurrency accepted in some countries, not in others. There's no overall view of how and when certain countries and regulatory environments are going to allow cryptocurrency to be fully in the mainstream. However, when we're doing these particular types of transactions, yes, we are very specific about the jurisdictions in which we operate today, but it's very important to understand that countries are opening up, it is becoming more mainstream, and saying we're at the forefront of that technology as well.
And I think the situation here is actually quite interesting because there's often a debate with regards to FinTech replacing traditional banks. So where do you stand on this? I mean, you are, of course, an example of a hybrid system.
Yes. Great question. Are we a FinTech or are we a bank? I'd like to think we're a mixture, a nice meld of the two, because we have created, for example, a trade finance platform which is built on blockchain. We're very advanced in the technology that we use, and we're very anxious to make sure that we're ahead of the game. We're not building legacy systems and patching legacy. We're actually very defined in how we're moving forward, to the extent that we will also be announcing a crypto exchange in the coming months. Now, that means that it's not just Ripple and XRP, which is going to be able to be traded there, but other currencies, other digital assets as well. So we're very forward-thinking from that point of view, but our core business is trade finance. And where we're also moving with this from the FinTech point of view is how can we take our journey even further forward with Ripple, not just from the payment perspective, not just from the use of the digital asset, but perhaps we could also, and what we're investigating at the moment, is how we can embed instructions for bonds, derivatives, foreign exchange inside a Ripple message, so that we can actually put the whole of the contract point for a particular trade, or a buy or a sell for a particular commodity, inside a Ripple message as well. So it not only carries a payment instruction, but also the underlying contract detail as well. Now, if we could do that, that means that the whole of the ecosystem of trade would not be based on 90 days, hope somebody pays at the end of the time, but have a defined, absolute exact way of working, tracking, transparency, immutability of the data, which is held for every transaction. Because to be fair, trade finance has, in the past, it has a reputation of there's a lot of fraud going on, there are fake documents, there are bills of lading, there's release of goods, there are criminals there trying to sabotage trade all the time. And what we're trying to do is ensure that every buyer is safe, every seller is safe, and every institution, as part of the ecosystem, are able to understand where their payment is, where their goods are, how those goods are being put together, and all the matching documents that need to go within that environment. So from a blockchain environment as well, regulation and FinTech is absolutely definitive that the whole of the system is put together correctly, and say we're at the real forefront of the way that FinTech really complements the way that banking activity takes place.
And I think everything that you've just discussed really just shows that the possibilities are endless. The possibilities are endless.
So let's go back to perhaps a little bit to your question and say, is an Amazon or a Facebook or whatever going to replace a bank? Will a FinTech actually replace it? In this day and age, what we're finding is that large banks are de-risking. Now, that means they're reducing the number of physical relationships they have with external correspondent banks. So instead of one relationship in every country, which would mean over 200 relationships, they're now breaking it down and saying, well, Eurozone, I need one relationship. Africa, I want one relationship and have a bank to serve every other country of the 54 countries of Africa. And again, in the Middle and Far East, you'd say, I want perhaps to work with HSBC as an example, and they can deal with everything for me. I'll have one relationship with them, because these relationships are expensive to maintain them, to build them, and go through all the due diligence with them. So when we're talking about a FinTech and the de-risking part of it, less banks out there, but the reputation of banks is not always great either. There's a recent cartoon I saw with somebody going into a branch of a bank, and instead of the bank asking the buyer or the seller for due diligence, the buyer is asking the bank for due diligence. Are you going to be around? Can you do this for me? Are you trustworthy? So trust is a huge thing to do with the way that regulation and compliance is coming up. And that's why fintechs are very, very quick, agile, and very tech savvy. And customers are becoming more tech savvy as well. They don't want banks to take hours, days, and weeks in order to do and look at the way that an account can work. They want instantaneous funds. And it's possible through mobile applications and through web and tablet-based applications. The banks are lagging behind. The big banks are doing that. But, as I say, we're fortunate that we have a very large IT resource that we can call on. We're very tech savvy from that point of view of building the blockchain environment in trade, and now adding on the payment channels, which will complement the way that our business works and how we support international trade generally.
And there is a discussion surrounding crypto replacing SWIFT. So we did speak earlier where you mentioned that it's not necessarily about replacing SWIFT, it's about complementing it. So let's get some more information on this.
Okay. I used to work for SWIFT. I was SWIFT for 20 years, so SWIFT is flowing through my veins. SWIFT is the preeminent messaging system for the financial industry, which covers, say, payments, FX, trade, in terms of securities, etc., Nostra reconciliations, etc. What we're looking with the crypto, though, is where SWIFT would have a store and forward system for most of its payment transactions, where you need service level agreements that in a certain time I will do something, but payment turns up at a certain time during the day. Here we're looking at the new network styles, which allow instant, real-time movement of the funds and visibility of those funds as well. So we would not have a situation where banks need to come back to you and say, have my funds arrived, it's 3 days later, I need to find out or find query messages moving around the network. There's nothing like that. I don't believe Ripple is going to replace SWIFT. Ripple is one of the complementary networks, which is going to allow those institutions who need real time to make use of that. And I think we're also seeing that SWIFT are changing their network capability so that real-time will be a possibility as well. But we may also see Ripple XRP moving across the SWIFT network as a currency when we're perhaps using something like FX.
Now, I just slightly moving on for a second, because we are slightly pushed for time, but I want to understand, where do you see your company and the crypto market moving forward in the future? You obviously mentioned that you're going to be building a crypto exchange, so let's focus a bit more on this.
Okay, with where we're designated at the moment, a lot of our business is Far East, Middle East, and those particular countries are very keen. The players in those countries are keen on having real-time capability and not being stuck with having, again, this liquidity problem of moving funds when they're buying services from other countries. So I think, again, it's going to be a subtle mix of traditional services today. We're going to see more influence from the liquidity side as far as XRP is concerned, underlying that. But from our cryptocurrency, from the crypto exchange point of view, I think it's going to provide, when people see that there's a small institution who's very well versed in trade and looking at currency overall, people are looking at finding a way to get good margin and interoperability of systems. And I think we're going to be, our pretension and hope is that we're seen as a major player in the market within the next 12 months.
And
so we'll see a huge increase in XRP there.
And just finally, you are the head of compliance and operations. So I want to ask you, we did slightly touch on this earlier, but I want your opinion with regards to regulations on this new market. Where do you stand? Is it a double-edged sword? Is it a necessary evil? What are your thoughts, Graham?
Yeah, I talk a lot of conferences about this, and one of the, I think regulation and compliance has a number of challenges in the current market. I think because of international regulations not being aligned, I think we're finding that certain countries are faster than others at accepting currency, but also from the operating tolerances we have for each of those currencies as well. Where you have rapid fluctuation of funds, I'm sure that governments and leading trade organizations are worried that there seems to be no balance and no control there. So what we're trying to do is very much promote the use of international standards, and again, we're talking with the ICC about that as well. We've had some initial discussions with them about where crypto comes into this. Will trade be perpetuated through cryptocurrency? But sometimes the trade fluctuation is very difficult. Again, why we're using Ripple is because when you do a trade, you're guaranteed that with the starting position and the end position of the use of that currency is not affected by currency fluctuation. And with that in mind, companies can be quite clear that there is no problem for them, and they're not going to find at the end of a real-time transaction it's costing twice as much if there's currency fluctuation. The other thing for Ripple, of course, is you don't mine Ripple XRP in the same way as other currencies. And that's why, because there's so much control within that as well. So we're looking at faster, more efficient all the time, but regulation does need to be in place, and there needs to be a central way of controlling and having almost like this international standards organization, which would say this is how crypto should be designated in these particular industry sectors, for example, FX, or whether it's in trade, and look at tolerances and how you, if a dispute occurs, where do you go? How do you resolve that? Who's going to be involved in it? What are the responsibilities and liabilities? So those are the sort of key things we need to discuss amongst the international community to ensure that compliance and regulation are not only adhered to in your own country, but there is a global standard in which to do that as well.
Graham Bright, thank you so much indeed. It's been an absolute pleasure having you on the line with us today and hearing more about absolutely a fascinating hybrid system that you have there. So thank you so much.
Brilliant. Thank you so much again for your time.
Absolutely.
Appreciate it. Thank you.
Now that is all from us here at Blocks Live TV today. You can get in touch with us on social media. It's at Blocks Live TV, and you can give us your thoughts on today's interview.